Good morning, everybody, and welcome to another Friday Mortgage Coach Mastermind. This is the 225th time Todd Bookspan and I have done this Friday Mastermind. So got my wingman, Todd Bookspan. What's up, dude?
225. That is amazing. It's been a fun journey and so grateful for you for inviting me along early on.
Yeah, well, thanks for all the time you've invested and all the leadership you brought to the mortgage coach community. So guys, we have a topic today that has come up in our Facebook group a number of times. It's all over Clubhouse. On our every day, we're doing 2 Clubhouse sessions at Mortgage Coach, an 8:30 session, kick off the day, Pacific time, and at 3 o'clock. And it just keeps coming up. Hey, it's low inventory out there. There's appraisal gap challenges where houses aren't appraising for the escrow price or the purchase price. There's just all kinds of challenges, and that means there's all kinds of opportunities for top producers, creative loan officers, smart loan officers to help solve that problem, or at least to make it better. So we've got looks like 1, 2, 3, 4 leaders. We're gonna start with Amber Kovarik in a minute. I do want to make sure everybody introduces themselves. Kathryn, why don't you introduce yourself? Just 30 seconds. How much production you do, what market you're in. Go around the room really quick, and then we'll start showcasing ideas.
Hi, I'm Kathryn Pedersen out of Steamboat Springs, Colorado. Last year I did 125-ish million for 380 units, and definitely we are in a tight market. So I'm excited to hear and participate in this discussion. Thanks for having me, Dave.
Thanks for being here. And guys, she lives in a town with like population of 10,000 and a metro under 50,000. So, a lot of production, a small market. I think that's super awesome. Greg Anderson, where are you coming to us live and what's your production?
Yeah, I'm Greg Anderson with Caliber Home Loans up in Seattle area. Last year we helped 293 families for about 123 million. So, and it is a hot market up here. Very hard to get a home.
Some appraisal gap issues, some homes not coming in?
Definitely, we're going to cover that today. Yeah, there's a lot of high bids, over list price. And that, of course, comes with challenges we'll talk about today.
Right on. Andrew, where are you coming to us from, and a little bit about yourself?
Well, I'm coming to you from Franklin, Tennessee. My market, though, is Northern and Southern California, and did 214 million last year, 400 units.
Congratulations. And I am seeing that as a trend, guys, where I'm seeing loan officers either move to wherever they want to move from a lifestyle perspective. When I interviewed Amber one time last year, she was actually, where were you? And you were in North Carolina for like a month, weren't you?
I was, yes.
and you closed like 45 loans that month?
I did.
Yeah. So I think that is just one of the gifts of Zoom and this whole virtual explosion we've had. Dan Keller, I mean, I think everybody knows who you are. You're on this channel so often, but for any new loan officers, a little bit about yourself and your production.
Yeah, up here in the Seattle marketplace, about 5 miles north of Seattle in Edmonds. And last year, approximately a little over 400 units, and right under, we missed 200 million by about 10 million. So had a great year, fun. And like Greg just said, it's super competitive up here. It's a bloodbath. So I'm excited for this call to learn some additional strategies that might help us in this market.
Love it. Love it. And how was Napa, you and Jenny? Did you get back last night?
Yeah, we got back last night. Napa was rainy. We left Seattle. It actually was sunny here in Seattle, and we leave to go to Napa, and it just poured the whole time. But it was great.
Your first time
great.
In Napa,
Yeah.
Last time you almost made it to Napa, it was, there was smoke in the air, and now you got the rain followed you. Well, you'll have to go back with Jenny.
Sure.
So cool. So let's bring Amber on stage. We're going to follow a similar format to Scriptapalooza, where we bring someone on stage, and instead of just like, hey, what's your favorite script? It's like, what are your strategies? What are your scripts to help realtors and home buyers in today's market? And wherever you want to go with that, you can go with it. So Amber, a little bit about yourself, and then share your strategy.
Awesome. Thank you so much. I am from Chandler, Arizona, right outside of Phoenix. And last year we did 436 units for right about 128 million. And just like everyone else said, our market is incredibly tight, and our consultations that we've been doing have kind of changed into just strategy sessions of introducing different concepts to our clients of how we're going to help them win in this market, really explaining to them why they want to be working with a professional lender like us that's going to help them put together these strategies, because without them, they are likely going to be making offer after offer with no success. And so one of the strategies that we talk about with every single client proactively is using what we call our appraisal gap strategy, and using mortgage insurance to help make up that gap for them. It's something that's been around for so long, and maybe something we use more like reactively, but now we're talking about it ahead of time, so that when the client gets in the car with the realtor, they already are prepared in knowing how much they feel comfortable offering over appraised value, without it affecting them in a negative way financially. And so I'll share a total cost analysis that I did with a client just the other night. And I don't know how I would necessarily explain this strategy so well without Mortgage Coach, because I feel like it would be really hard for a client to understand and visualize this. But in this example, this client had already made an offer on the house when I had done a consultation, and the home was listed at $400,000. And so he went in at a $420,000 sales price, and he wanted to put 20% down. So I showed him what that would look like, monthly payment, cash to close, if it appraised at 420, sales price, put 20% down, kind of that vanilla loan. And then I said, hey, client, let's just talk about what this looks like if the house appraises at, let's say, 405. So let's say that you're $15,000 now of a gap between your agreed upon sales price and the appraised value. What happens in that case? And so we showed that in this scenario, sales price is the 420. The loan amount we kept the same. So we didn't adjust it, even though the value came in less. Interest rate was the same, monthly payment was the same, but our cash to close went up just slightly, because what we did is we just used a single premium mortgage insurance policy to help make up that gap. So in this example, it took them from an 80% loan to value to an 84% loan to value. And so it cost him an extra just under $1,300 to make up that $15,000 gap. And so what we'll do in the consultations, in most cases, they haven't made an offer, and we can just say, hey, client, let's say that you find this dream home and the agent says that you need to be, $20,000 over the potential appraised value. How is that going to affect you? And do you feel comfortable coming out of pocket with an extra $1,300 or $1,900, whatever it is in their case, to win this house? And they are so happy about this strategy, because in their mind, if they've already had the conversation with the realtor about needing to go in over list and potentially over appraisal, they're thinking a lot of money out of pocket, liquidating their savings, having to take 401k loans, and they're willing to do it. But when we can take a $15,000 gap and turn it into an under $1,300 cost, they're pumped, they're more excited. I believe that a more excited, more confident buyer is going to be more likely to write offers, and in this market, write the aggressive, competitive offers that they need to write in order to get their offer accepted. And the realtor partners love this, because it's us already having this conversation with them, so they don't have to play the game of asking, how much money do you have and how much do you feel comfortable coming in with out of pocket, and these conversations that they don't really want to get involved in all of their finances. And the strategy works in like a 15% down option. It really works well with anyone putting down 10% or more, because you can just, go up into that next mortgage insurance tier. So I'll usually proactively show them, like, if you're in this 420 price point, how much could you go over with keeping in that next mortgage insurance tier, like staying under 85%? And then this would approximately be that cost of the mortgage insurance. But in this example, I showed him that if you decided to do 15% down and the home again appraised $15,000 low, we would just have a larger single premium mortgage insurance policy compared to just a straight up 15% down that appraises at the sales price. And so just talking about this proactively in the conversation has been a game changer. It's not something that I ever did before this inventory crisis that we're experiencing, and it's really helping us to win in the market.
Love that. Think of all the words: inventory crisis. She's proactively showing this. appraisal gap strategy. So everybody checking this out, Amber is also going to be an ambassador for Mortgage Coach at the Modern Mortgage Summit. And she's going to create a couple how-to videos, how to do a move up. So she's going to talk about, hey, how can we help get people clear and confident that moving up is the right decision for them? That's going to help with the inventory problem. Of course, they're listing a home and they're buying a home, so they're not quite equaling it out. But she's also going to talk about this. So Amber, I think you crushed that.
Hey, Dave,
Does anybody?
You said Modern Mortgage Summit. You're talking about the Modern Real Estate Summit that's coming up.
Boom! Thank you, Todd. Raise your hand if you have a question for Amber. We got a lot of folks. We don't have time for everybody to ask a question, but does anyone have a question on the panel for Amber? Raise your hand.
Now, let me just point out a quick compliment real quick. I mean, the number one thing that you heard Amber say in my mind is she's helping her real estate agents not have that conversation that you as a loan officer don't want them having anyway. You don't want them talking to your clients about money and down payment. And you've just taken that away from them. And you're actually supporting what they're telling their clients about how crazy the market is. So it's helping your real estate agents in such a big way when you're articulating it with the TCA and having that conversation to support and help your agents, ease through this.
Yeah. And it's allowing us to say, when we're making our Monday realtor calls and, we're checking with our realtors is like, hey, who do you have that's shopping with a pre-qual that's not with us, that's losing out on offers? Can they get a second opinion through us? Are they talking about the appraisal gap strategy with them? So we're stealing clients from other lenders that are not doing professional presentations and that are not like proactively strategizing with them on how they're going to write an offer that's going to win.
Right on. So Amber, a couple things. One, if you could share the total cost analysis, if that's an actual customer, make a copy of it.
It's already a copy, so I can send this to you.
Okay, yeah. And if you could get it, maybe even put it in the link so people can get it right now. There are a few folks that are confused. Okay. What I'm going to do with you guys, because I do think other people are going to cover similar strategies, and we do training on this. So I'm not going to address the folks that are like not getting it yet. Because remember also, this is recorded. You can listen to it. With that said, Amber, you killed it. That's an awesome strategy. Thank you for all the value you bring. I will share it in a minute to everyone. Kathryn Pedersen, jump on stage. And Amber, stay as long as you can.
Yeah, thank you.
Thanks, Dave. So good to be here again.
Good. So what's your strategy?
Yeah, so it's actually very similar to Amber's, but it's super fun to hear how she does it. I have a little bit different approach because what we're finding is that agents are not accepting offers if they're putting less than 20% down. So this kind of goes very similar, but my perspective is let's teach the listing agent before they see that contract come through to say, hey, if you receive a contract that's got 10% down, let's say, it's still going to be fine if that appraisal does not come in. So it's just a little bit kind of direction on Amber's same thing where we've got something to show them of, hey, here's if it's all good, the appraisal comes in just fine. But even if the appraisal comes in 20,000 less in this scenario, here's what kind of happens for the client and they're still okay. Or we can also do the single premium. You can see there's, slight differences here in what they look at or what they have for monthly. And this would be more if they're trying to keep the monthly payment or trying to keep their down payment the same, but maybe, still want to have a good amount down and we like to give them a few options. And then this one is that single premium to get them out of the mortgage insurance, and they're also saving some money on the payment here. So it depends a little on kind of what the trigger point is for the client, but my point to the agent is you're going to be fine either way. So there's no reason for you not to accept this 10% down offer. You don't have to accept the 50% down that's at a lower price. This will actually get your client the same amount or the better price. But instead, you're going to, so you're kind of ending up with the best of both worlds on the listing agent side. So that's kind of my strategy on the teaching and training side through Mortgage Coach on the listing agent. So exact same strategy to Amber, just a little bit different take on the same thing,
You're-
and a little bit different on the 10%. We just moved it up into the 5% single premium instead of doing the 10% and 20%. So
I love it. I love it. There's some questions that came in on Facebook chat asking each of you which MI companies are using.
I think for me, I pulled this through both Genworth and National, I think were the two I looked at, if I remember correctly. And if you use Encompass, a lot of them will let you switch it when you do that order just to single premium. So it's a pretty easy thing to pull really quick. It's just as quick as pulling monthly.
Got it. And Amber, what about you?
Yeah, I was just messaging back Robert, but our origination software shops the mortgage insurance across all the MI companies. And so we're usually going with whoever's the lowest. So it's really a click of a button, and it tends to vary between client on who's got the lowest single premium.
Got it. All right. And do want to remind folks, we do have, if you are with an enterprise client of ours, we do have MI integrations into Mortgage Coach. So check that out. Does anyone, Todd raised his hand, and guys, raise your hand when it's kind of Q&A time between speakers so that I can call on you if you have a question or comment.
Right. So again, think about what Amber just said. She shops it for who's ever the cheapest, right? So it's just one more thing to be telling your clients up front when you're explaining to them how you're going to help them. Hey, you know what? You may find that my rate is the same as the competitor, but actually what I'm going to do is I'm going to shop your mortgage insurance. And believe it or not, I can save you more money that way, potentially than someone's going to save you with a lower rate with higher fees. And so there's just one more thing that you can point out that you're different because you have that strategy. And then, you can throw in some insult like most of them's processors, pick whoever brings them the biggest box of donuts each month or something like that.
Yeah, sometimes I'll even bring up, hey, with this other company, the mortgage insurance premium was this much per month, but this other one has this lower one, so you can see the difference in the payment.
Yeah, and guys, notice that they're being proactive. Like Amber's doing this with every buyer. Kathryn is using this as an opportunity to educate listing agents. So I am going to ask some scripting from both of you, because Amber, I would like to hear, how are you scripting this, and what are you saying to real estate agents to just make you look like a ninja? What does some of that sound like? And then we're going to go to you, Kathryn, and then Andrew, if you could get ready to come on stage, you're going to be third.
Yeah, so after my consultation, I call the agent and I explain this to them, and I say, hey, great news. During my consultation, I was able to show our client how they could offer 20,000 over appraised value, and I can use a single premium mortgage insurance policy to make up that $20,000 gap for a $1,900 cost for them out of pocket. And I kind of just briefly explain it. I'm like, I want to give you enough information so you sort of understand it, but you're not going to know the details of this. But essentially, I'm not changing their loan amount. And due to the lower appraised value, it's just bumping them into the next mortgage insurance tier or creating a need for mortgage insurance if they're putting 20% down. And so depending on the client, their credit scores, their debt to income ratio, it'll adjust how much the mortgage insurance policy is. But for this client, they're prepared, realtor, to go in and make an offer 20,000 over appraised value, knowing it's only going to cost them $1,900 out of pocket. So they should be really prepared to follow your suggestion in making a competitive offer.
And guys, how much sense does that make to be bringing that to every realtor? Like other loan officers are like bummed when this happens, and Amber it's an opportunity. Like the best loan officers make it an opportunity. Kathryn, any scripting you have on how you position this and market this to agents?
I really, what it would be is like, let's say during an office meeting saying, hey, if you do receive two offers, and let's say one is a whole bunch down, but a lower, let's say it's at the offer price, there's no reason why you shouldn't accept an offer at 10% down over the ask, because they do have the ability to come in and still purchase that property, even if the appraisal does come in lower. So that would be the scripting to the agents. And we try to do that at like an agent meeting, let's say a big office meeting, to show this type of mortgage coach presentation for that.
Cool. All right. Todd, anything you want to debrief on that before we bring Andrew on stage?
No, I just think that you guys are just crushing it. I think it's my favorite thing you just said is that the best loan officers make it an opportunity, right? I think that's really, it's that glass is half full, and really, you know, Amber and Kathryn are both using this to educate their realtors and educate the listing agents on how you now have, you know, you've positioned your client to be better than the other clients and help them understand that, you know, more down doesn't mean better.
Yeah. And Amber, before you go, and I don't know if you have a move up analysis, but I mean, that is another approach. I mean, low inventory market, if you can actually help create a listing, that helps in this market. Could you describe your move up strategy real quick for anyone who hasn't heard you do it before? And if you do have a move up TCA, we'll definitely would love to see it.
Yeah. So when we're talking to clients, a lot of times they're calling in about refinancing, and especially right now, a lot of times it doesn't make sense for them with the move we've seen in interest rates. But we're like digging deeper during those calls, or even during our client check-in calls, about just asking them if the house that they're in is still the house that's working for them. Does it meet their needs? Have they had any thoughts of wanting to move up or move into a different house, whether it's the need for a home office or an extra bedroom or the pool or whatever the case, and just explaining that we have this opportunity right now to sell their house at potentially one of the best seller markets we've ever seen, net the highest price for their property, and extract this equity, like reminding them that the equity they've built in their home right now is like kind of like monopoly money. Like it could all go away at some point. We've seen it happen before. I don't think it's going to, but why not sell at the peak, extract that equity, and roll it in to the next house that better meets your needs? And we run this total cost analysis for them to show them, okay, what do you think it's going to cost you? And we'll involve their realtor to get the home that has the home office or that has the extra bedroom, and then show them if they took their proceeds from the sale and put that down in the new house, how much would their payment go up? And in a lot of cases, it's like a couple $100s a month. So it's like, hey, client, you could sell at the peak, roll the money into a home that better meets your needs, have your payment go up a couple $100s a month. And yes, it's a tough market. And yes, it's going to be tough to find that next home, but it's going to be so worth it. Whether you need to, sell and move into a VRBO for a little bit, or if we can have you buy before you sell and work on what that strategy looks like for each client, but just get them kind of thinking about, well, maybe I should look at this opportunity to sell now and buy because I do have this need or desire. So I'll put the TCA link in the chat so you can see a move up buyer analysis that I created for someone.
You did put it in chat? I don't see it.
No, I will.
Okay, so guys, I will share that in a minute. And I've also interviewed Amber on this, and she's going to be on main stage at the Modern Real Estate Summit, giving her best explanation, like, hey, realtors, this is, making a pitch to agents. And so stay tuned for that. So let's bring Andrew on stage. Andrew, how you doing, brother?
Morning. How are you?
Good. So what are some of your tactics and strategies and ways that you're bringing value to both borrower or buyers and agents in today's market?
Well, I had this much in notes, and this much has already been covered. So I just want to, good job, Amber and Kathryn, for stealing all my thunder. But I just want to reiterate.
But confirm, like if you're doing everything they're doing, confirm.
I mean, basically the stuff I wrote down is exactly what you guys are saying. And my TCA that I presented, which I can show, it is basically the same as what Kathryn did, comparing if it's a low appraisal, here's an option for monthly, here's an option for single premium. Happy to show that. But I think maybe I can add a little bit in terms of going into the psychology of what a buyer is thinking right now when if you don't do this. Let's run that scenario, right? If you don't say anything about a low appraisal upon pre-approval, and the agent maybe doesn't say anything about the realities of what appraisals are doing relative to what the market's doing right now, they get the client excited about a house, they write this offer, they're $30,000 over asking. I mean, what the heck do you think the client's thinking? I mean, the client is clearly gonna be like, am I overpaying for this house? Am I buying at the bubble? Am I the one left holding the bag? Am I the sucker? And so I feel like getting ahead of this before there's a property, before there's a price, before there's a bidding war, before there's anything, before they've even gone into a car with a realtor, takes away a lot of the, I mean, they might still think that the market is dangerous, but they won't necessarily think it's us or the realtor pushing them into a specific house that they're overpaying for. So by doing this up front, it shows that this is the realities of the market, not the realities of whatever house and negotiation and bidding war you end up getting into. So it's not like, oh my gosh, I think you overpaid for this. Let's talk about it if it doesn't appraise. It's, hey, we're going to talk about this because I talk about this with every buyer, because there's a chance that no matter what house you buy, if you're buying it at the top, and there's an issue with appraisals potentially. I think also just educating the buyer on the realities of, you know, if there wasn't a mortgage associated with this, the appraiser would have a lot more flexibility to be able to bring it in at value. At the end of the day, like my scripting on this is, you know, an appraisal is an opinion of what the property would go for if it was on the open market. And look, it just went for this on the open market. So in reality, they have to have a lot of data to suggest that either the buyer or the seller are acting irrationally in order for it not to come in at the purchase price. However, the reason why appraisals come in short is because we as lenders make the appraisers do their job with one hand tied behind their back, and they have to look back only a certain amount of time. We don't give them latitude to make extreme market adjustments. So because of that, you know, in reality, almost every market you're paying top dollar. Like even just because it's gone up quickly, any market that you look at, for the most part, you're paying, if not top dollar, close to it. There's very few times where you're buying a house where it's come down in value, like maybe 20% of the time. So the appraiser always at some point is having to justify why is this house worth more than the last one that sold. And a big piece of that is just the upward trajectory on the price. When it's steeper, it's a little more difficult to do that. So explaining that to a client, they understand that, like, I'm not overpaying. It's just that the appraiser is hamstrung. So let's just come up with a solution. And then these are the solutions that we present. Providing and creating that into an actual benefit for the client. And by letting them know that, listen, you're going to have a leg up on the people who are not prepared with some of these strategies as buyers. So I turn this into an offensive strategy with a client. I let them know, listen, this is what most people, like if you go to a B of A or a bank, they're not going to tell you to waive your appraisal contingency because they're not going to be held with that liability. But let me tell you about what the risks are of waiving appraisal, or even like what we call a partial waiver of appraisal contingency. So everybody knows if you waive your appraisal contingency, there's nothing, but you can also do a partial where it says, we agree to move forward with the transaction as long as it appraises at X. So you can set some sort of, like, let's say you're in at $750 purchase price and they're comfortable with all of the options that we presented on Mortgage Coach down to $700K purchase price because of however they're going to do it. You can actually write into the contract that buyer agrees to move forward with the transaction as long as appraisal is over $700K. And that a lot of times will it's even better than just waiving appraisal contingency sometimes to a listing agent, because a lot of times a listing agent knows that if you waive appraisal contingency, you'll just find some other reason to back out. But if you're specifically putting a number in there that's reasonable, that it will appraise for, that you've already agreed to move forward on that, I think it gives the listing agent a little bit more, that they're not just waiving it, hoping that it comes in, that they've actually come up with a strategy around that. It's also some more content that you can use in your listing agent calls. And I think at this point, if you're not calling the listing agent on every offer that goes out, you're really, really missing out. I think that's kind of a basic at this point. So, but a lot of people ask me, like, well, what do you say on those calls?
Hey, time out.
Yeah.
I just want to get a hand. Is everybody doing that, calling the listing agent? Yeah, everyone's raising their hand. So anyone listening to this, if you're not doing that, all the top producers are doing it. Go ahead.
Yeah, instruct your agents when they write the offer to copy you on the offer. And I tell them, just copy me. Like, I'll look up the listing agent phone number. I'll look up everything. Like, you don't need to give me all that. Like, I'll find it. And then I call the listing agent. And, you know, a lot of times I'm just using the script of, like, you just received an offer from my buyer, John Smith. Bob Jones is the one that wrote the offer from Coldwell Banker. I'm providing the financing for them. I wanted to find out if you had any. Bob asked me to call to find out if you had any questions around it. Frequently, if there's multiple offers on the property, appraisal is going to be a big thing. Oh, do they have enough money to come with the appraisal? Great, glad you asked. We always, on all of our clients, we always know that appraisal could be an issue. So we come up with solutions prior to. You'll notice in the contract that they, whatever, fill in the blank. They waived appraisal, they give a partial appraisal waiver, they're putting X amount down. In fact, I gave them options of what's going to happen if/when the appraisal comes in low. If you like, I can forward those options to you so that you can see it as well. So I actually literally just forward them a Mortgage Coach a lot of times and say, like, we've already presented that. Whether they look at it or not, who cares? They know that you've done that due diligence, you've had that conversation. So it's not always about the highest price for an agent. they're going to be the ones pushing an offer. They're going to be the one that they're going to want to go with, the one that is going to stick. Last thing they want to do is get 21 days in and have to start over again. So I explain all of this to a client on the initial call that I have with them. We'll talk about rates, qualifying, all this stuff. Yeah, great. Anybody can do that for you. Let me talk to you about the realities of the market right now and what we do that's going to set us apart from maybe not people in this room, but every other Yahoo out there. Here's what we do that's actually going to help you get your offer accepted, because I can give you a great rate on a house that you hate, but I would rather get you financing on a house that you love.
Love this. So if you could share your total cost analysis
Sure.
in chat, and Kathryn, if you could do the same, because I want this to be like a training. People are hearing strategy from you guys. They're hearing some scripting from you, and then they can actually see the presentation and how you're presenting the numbers, because there are different nuances with all those. Anybody have a question or comment for Andrew before we bring Scott Nicholson on stage?
I'll throw in
Question.
two things. Number one is I'm trying to write it down, but that last thing you said about you can help you get into a loan you hate or a house you hate, but I'd rather get you into whatever you said, your dream home or whatever. Can you say that one more time?
Yeah. So I said, listen, anybody can get you a great rate on a house that you hate. I would rather get you financing on a house that you love.
That is awesome. And then again, just like Amber had the appraisal gap strategy, I love that you have a partial appraisal waiver strategy, right? I mean, think about everyone here is branding what they do, and then throw one more thing on top of that is you can also have your clients say, hey, they'll buy it up to this appraised value, or they can even say, hey, I'll buy it we'll pay up to $10,000 over the appraised value is another way to do that partial appraisal waiver strategy.
Right.
Love it. What I want to do now, I want to bring Scott on stage before we bring Dan. You're going to go after Scott, and Greg, you are going to be the anchor man here. So one of the things I think that's unique about Scott is not only is he a technician and he knows how to, whether it's sell or buy down, he knows how to bring whatever creative financial strategy to bear for the client that's going to help him. But he also knows how to market that, like how to put that on a website, how to turn that into something that you can look up in a Google search. So Scott, what is your strategy? You got about 5-ish minutes to show your strategy and tell everybody what you're doing and how you're doing it.
Good morning. This is great. I think Amber nailed it. It was funny. We were on Clubhouse the other day and Keith was giving his, low inventory, on there. And and Andrew was in there with us. And one of the things I took away is like, hey, I really need to show if you're going to overbid on a house, what the financial impacts are to the consumer, because they have no idea. And it was really funny. And I mean, Andrew, I took your, I went on a page of Andrew notes in there and Keith. So I went away later that day, and I'm going to share my screen. I'll show you the presentation. And I'm going to pause I'm going to pivot just for a second as I'm pulling up my screen. Is one of the things that I'm listening to everyone right here, and for everyone listening to us, is those who are going to win right now are going to be able to decipher and simplify the communication to the consumer and agents. Because if it's complex, it totally reminds me of the seller buy down. Like, what did you say? I don't get it. Right. And it just, you got to simplify it. And I think a key is showing a TCA on that. And I'm going to pull, there's really two things I do. I do a reno, and I'll post this in here. I'll leave this one alone because not a lot of people have a background in reno, but I'm going to pull up a presentation I did the other day on this particular subject. Oops. And so I titled it, Know Your Numbers Before You're Going to Overbid on a Property, right? And this is what I'm sending out to consumers and agents. And I'll kind of,
Hi, Scott Nicholson, Mortgage Possible. So
let's look at the numbers. So I'm going to hide my screen. Here's your test. You're a buyer, you and your husband, you and your wife are going out looking at a property, and you're not being forced, but you love the property and you're willing to overbid on the property. The price is $625,000. You're going to put 20% down. You have excellent credit. So if you overbid on the property by $31,000, what do you think your payment would go up? And what do you think your cash to close would go up? And so I asked that in my group on Wednesday to a bunch of lenders, that same thing on this same presentation. And I had answers from, one of them said $500 and 31,000. Another one said like 250 and like 16. And these are lenders, right? And so the answer to those questions is here in the presentation. So column 1 was what they were originally trying to do. And they're going to, in column 2 and 3 is we miss value, but I use overbid in this. So you can go either way. But by overbidding by 31,000, their payment actually stayed exactly the same, and their cash to close only raised $1,100. And think about that. Lenders were missing it by $500 a month and $30,000 in cash. So imagine what the consumer and the agents think about this. Like, no, we can't do it. We're backing out. So imagine a consumer's going, we love the property, Scott, but we just can't get into that mix. So think about the presentation here is there's your 20% down. Column 2 is we miss value by 31. And Amber and Andrew and Kathryn, they're exactly right. You have to learn to work the single premium and factor that in. And then the third column is we missed by 31, but I pivoted and changed, reframed it to the consumer. We raised payment. The issue here on the third column was, God, Scott, I begged, borrowed, and steal to get the 134,000. I don't have that money anymore. I can't raise up. So in the third column, he says, okay, we're going to switch and raise payment by $34. And then now the benefit I'm going to help you with, I'm going to decrease your cash to close by $5,000. So I've accommodated whatever they wanted in row 2 or 3. If it was payment sensitive and maintain my qualifications, $1,100 to stay in the game, they got the house of their dreams. If it was payment $35, exchange for $5,000, we got the house of their dreams. Let's just say this in the fourth column, not only did we overbid by 31, the appraisal missed by 31. So now I missed by $62,000. How does that impact payment and cash to close? $34 again, and I decrease cash to close by $800. Think about that for a second. If the customer truly understands this, think of their decision-making processes now moving forward and the fear of maybe trying to overbid or the fear of taking the appraisal off the table. I think it's critical that you guys master this. I think it's critical that you simplify the message to this. And I think it's critical that you get it to every single buyer you're working with. And Amber said is how many other lenders that don't get this, and I can get the opportunity to work with them and their clients that aren't presenting this way. And then not only that, presenting and talking to the listing agents. In one of the things, Andrew brought Brian, I think it was, on stage, our last, and I think Keith Collins brought Julie. Two of the common points to two big listing agents. We never get phone calls. No one calls us. Darn, just give us a phone call. So one, we know you can communicate what's going on with the file. Two, imagine communicating this. Hey, Julie, or hey, Brian, it's Scott. We're okay with stripping out appraisal contingencies because this is what we have put together for my client. So, and again, you're trying to get that offer accepted, but number two, that's a good target, that listing agent, to go after. So there you go. There's the presentation.
So you killed it. If one, you can put a link to this in Zoom, and I'll get the link in our Facebook group. And then also real quick, Scott, you're packaging this in Lender Launchpad, which I think is a value. I know you can give out phone numbers, tell us, and you only got 2 minutes because we got to get Dan Keller on stage.
Yep. So
2 minutes about how you're packaging it and marketing it with a website.
Yep. So I created in Mortgage Coach, take the link over into presentation mode. I'll dump it into presentation. It formulates, I get to title it how I want to. It formulates in there. I'll put my description of what I want them to understand, a simple message into the consumer. It pulls in, if people don't know me, right, I have to build rapport quickly. So it pulls in my social survey, pulls in a rate market, pulls in a little, call to action on myself. So that's how it works. But every time I build a presentation, I build a whole content library. So you can search based on the content you're making, especially moving forward. You guys better learn to make content knowing what Facebook's doing, Google, Apple, a lot of different changes to protect the consumer. It's all going to be content, original content creation. So it's really important that you get something like this done and packaged.
Yeah. So Scott, if you could share a link to this specific appraisal gap strategy. And then guys, I talk about all the time. As mortgage professionals, local providers, you need to do what others can't do and what online lenders can't do. If you could stop sharing your screen real quick, Scott. And and one of the ways of doing that is to having a content library online that will show, hey, here's my move up analysis. Here's my appraisal gap strategy. Here's my rent versus own strategy. Wherever you're solving creative problems for buyers and agents, you need to have that in a catalog. So check out how Scott has packaged that with Lender Launchpad. He's put a link down below, 2 links, one to this specific strategy and one to his online library. Check it out. Todd, anything you want to comment on that before we bring Dan on stage?
Well, I just compliment Scott. He does such a good job of articulating to the consumer what it is, right? And I love the fact that up front, although you said you did to a room full of loan officers, right? Anytime that you can ask a client a question that you know they're going to have the answer to that's way wrong, and then show them, hey, here's how I'm solving that problem so it's not the way you think it is really brilliant. So great job, Scott.
Yeah, and titles matter. Notice that he's got a headline that's it positions him, know your numbers. Other loan officers don't know their numbers. Anybody else have a comment or question before we bring Dan on stage? All right. Greg, you will be the anchor after Dan. Dan, what do you got for us, brother?
Hey, good morning. So I'm going to share this real life scenario or story with you that happened just last week. And it'll come full circle in regards to how I'm using my strategy. But we had a client about 2 miles north of our office in a town called Linwood. It's a suburb of Seattle. If you're from this area, we call Linwood Linhood, right? So it's really hard seeing some of these values that are getting pushed. But there is this beautiful home in a residential community listed at $975. Our clients wrote an offer on it and escalated all the way up to 1.125. Okay, so we're talking, what is that, $150,000 over ask. And so I'll come back to how we educated the client, how our role in getting their offer accepted. So long story short, we get the appraisal back, and my processing team comes to me and says, hey, Dan, we got an issue here. We've got a low appraisal. And I said, okay, how does that appraisal look? And the appraisal came in at $1,075,000. So it came in $50K short. And so obviously my job now is to call the customer. So I call my clients and I let them know. And I say, hey, listen, good news is we got the appraisal. Bad news is it came in a little bit low. And they're like, okay, where'd it come in at? I said, it came in at $1,025,000. And the husband's like, hell yeah. He was just so excited. He thought they collectively were expecting the appraisal to come in about $100,000 to $150,000. So they were stoked. And so I tell you this because how you are educating your clients up front in regards to the market and what to expect and setting those expectations both with them and our office and then the real estate agent is so key. You get responses like that. Now, not every single client celebrates when they get a low appraisal, but this just happened last week. And I thought I'd share that as we talk about strategy. I think Scott knocked it right out of the park in regards to content is education. Content is key moving forward. So if you're not creating content, you're missing out. And when Scott and a guy like me says you need to be creating content, it's educating the consumer. It's educating people out there. And so one of the things that I do, and I can share a TCA in a second, but what I think everyone that's presented so far has incredible TCAs and is presenting strategies that I believe all mortgage pros or a lot of mortgage pros are using. If you're not, adopt and use right away. But what I wanted to share with you is uniquely what I'm doing, and it has to do with the education up front. So when I sit down with a client for the first time, I'm having a fears and concerns conversation with them. What are your greatest fears? What are your greatest concerns about getting approved and buying a home right now? Every single client right now has current concerns about the market, bubble, etc. And so one of the things that I do right away is I'll give them information around the market. So I know we shared this the other day on Scriptapalooza, but we go over, are we in a bubble or not? And I compare the 2007 to the 2020 market. The next thing I do after we go through this is we are transitioning into some more of their fears around, all right, Dean, are we in a bubble? What if we're in a bubble? What happens next? And so I give them this slide right here that shows them the ROI. I forget who said it earlier, but I'd rather get you into a home you love than have you settle and overpay for something that you just kind of like. And so what we talk about is, let's say we're in a bubble. Let's say worst case scenario, the market does take a dip. I hate using the word overpaying. I don't believe anyone's overpaying for a house right now. I believe our clients are paying what they want for a house. They're coming to an agreement, and so is the seller on a said price. And whether you look, I think overpaying's a negative word, so I try to keep it positive. What you pay for a house right now is what you're paying for a house, and you're going in debt to purchase real estate. And you need to understand what that means. Let's talk about the pros of that. So we talk about appreciation down the road. We talk about principal reduction, paying down your mortgage every single month, and that's a forced savings account. We talk about the IRS benefits. So I'll go over this slide with them and make sure they're crystal clear that even if you purchased a home in the worst market ever, and that home actually goes down in value, if you stay in that home for 5 years, you're going to come out of this on top with a 277% return on your down payment and closing cost investment. And so when we have these conversations with clients up front, it tees up an opportunity now to share a TCA and say, okay, based on the home that you're looking at, it's listed at 747. We all know it's not going to sell for 747. So based on your realtor's recommendation and our conversations, here's how this would look. So you know where to draw that proverbial line in the sand. One of the things I love about this Mortgage Coach Rent versus Own presentation is if we go down and we look at what our clients are paying in rent, what our clients right now, their total cost for housing, and how that would look if they invested in real estate, the total comparison between, all right, paying $900,000 or $910,000 for this home, equivalent to rent is only $2,400 a month. So would you prefer to buy a home that you're settling for, or would you prefer to buy the home that you really want with lower than ever 30-year fixed rates, and then begin embarking on that journey of home ownership, but also reaping the benefits, the financial benefits of that? And so I think a lot of it has to do with the conversations we're having with our clients up front. Now, the real estate agents, from a real estate agent standpoint, they love it because they're not sitting in front of their clients and having their clients be shocked when they say, hey, you're probably going to have to bid about $100,000 over list price. A lot of agents in Seattle list low to generate a bunch of offers, so it's deceiving. One of the last things too, Dave, I want to share, and I think this is really big. This has been something that's helped me a lot with listing agents. I call every single listing agent. The other thing that I do on every single one of my pre-approval letters, look at this highlighted section. Full and thorough underwriting review of the following items: credit report, income documentation, and asset documentation. I hire COVID-19 safe or secure wage earner. I get more compliments from listing agents on that than anything right now, because what it's doing is it's delivering confidence. The listing agent and the seller are confident. Our agents are confident in our borrowers' ability to make a financial decision. And that I believe rests solely on our shoulders as a mortgage professional.
So guys, we always talk about having the hopes and dreams conversation. And Dan's right. In today's market, having the fears and concerns conversation with home buyers it's getting ahead of it. It's finding out what they are. It's being proactive. Dan, if you could share your appraisal gap total cost analysis, because I always think there's nuances in how you do that. And then thank you for sharing your slides. Anyone that's watching this, you can go back and watch the recording and you can take a screenshot of it. And I think he has provided some of these. These are some of the same resources, and it was part of his scripting on Scriptapalooza. If you did not watch Dan on Tuesday's Scriptapalooza, go back and watch it. If you didn't, if you missed Amber, she actually opened up Scriptapalooza. She completely killed it in sharing that. So I would go back and watch both of those. Anybody have a question for Dan before we bring Greg on stage? All right. So Greg, we got 11 minutes left and everybody's kind of averaged about 10 minutes. If we go long, don't worry about it. Like, we want to make sure we get your ideas and your strategies. So how are you bringing leadership to realtors and home buyers in today's marketplace? And you're on mute.
Okay, there we go. Just to, like Andrew said, everybody, we're dealing with pros here on the panel. So everybody's covering what's top of mind. And Andrew and I and Scott have been, and Kathryn have been in the clubhouse a lot. And this has been a hot topic this week for sure. And I think Scott shared that he had a meeting with a group of loan officers and asked them, this question on the overbid strategy, how does it work? How does the math work? And what, none of them could answer the question, right? So the problem there is, if you have loan officers who don't understand the math on how to help somebody, then you guarantee that realtors don't understand the math. So, everybody is calling listing agents right now. That's a must. That, like you said, Andrew, that's like, that's 101 at this point in time. I hate making cold calls. I mean, maybe some people love making cold calls. Right now, you don't ever have to make a cold call, because you're going to call every listing agent, and you can call any agent in the world and talk to them about these strategies that you have and what you're doing. So we too are doing these, upfront consultations. We're having the conversations not only with the client, but then we're bringing in their agent on a conference call, so we can get them understanding the concept. So I have one that I shared a few weeks ago, my TCA for the low appraisal. I'll go ahead and share that one. Just because, as Dan was saying, in our market, we are dealing with big dollars. So I'd love to be in Amber's market, where people are only 20,000 over asking. I talked to an agent yesterday. Their listing went $600,000 over asking. Okay. So how do you, it's kind of like, how do you compete with somebody who doesn't care what the price is? There are people in our market, and I know all over the country, but definitely in our market, that have made a lot of money at companies like Amazon, Microsoft, big tech companies. And so they can throw it around. If they really want the house, they're willing to pay whatever. And so we have to prepare our clients for that and let them know that, hey, we're going to put our best foot forward, but if we lose, we know we win out. We didn't leave anything on the table. Okay. So my strategy is a little different. It's 100,000 over asking, just because that seems to be what's happening with a lot of our clients. Same thing. I'll just go brush through it really quick. We're using a single premium MI to buy out. Okay. Because if you have somebody who's got a strict payment budget and a strict cash to close budget, that we want to keep their cash to close and that payment as close as possible. So I always give them the option: pay a little extra in your cash to close, or pay a little extra in your payment, right? So we're financing in this strategy, we're financing in that premium. So you can see, even if the appraisal came in my low appraisal number 2 option over here, you can see that we're only going up $30 a month, and we're keeping the cash to close the exact same. So this now allowed this client to win the home, because they were able to go in with their down payment that they had. They had no additional money for for low appraisal. Okay. But they were able to go in and basically do that partial waiver of the appraisal for $100,000. So they were able to win in that case. That's super attractive to a seller. It doesn't matter what you offer if you can't back it up with that low appraisal, right? So this has been something I've been using now for about a month with agents, with clients as well. So it's kind of our main strategy. Everybody's kind of covered on this, but I think, you know, to go to Dan's point, it's the consultation you're having up front. It's talking to the agents, educating the agents, because they're not getting that education through their brokerages. You have to really understand mortgage financing and what those options are to be able to talk to talk to a client about this strategy.
Love it. Love it. So I do have a couple questions, but before I get into those, do you have another TCA to share, or is this the one?
Yeah, so I have had a couple. So the other one, I can share the link. It's pretty simple, but it was more of a client who has a minimal down payment, so they're more in the $500,000 range. Let me get that one up here.
While he's getting that up, guys, I want everybody to know that we do training every Friday. We have black belt training. So I'm sure we will be covering this on our Friday training at 11 o'clock. Every Thursday, we do group coaching where you come to that Thursday call. We'll teach and train on anything. So I'm sure this will be something that will be talked about and trained on. For those of you that have questions or you need help with how to do things in Mortgage Coach, or you want to discuss this, black belt training at 11 Pacific on Wednesdays, and Q&A, answer any question you have Thursday at 9 o'clock. There's always a mortgage coach, success manager there to answer your questions and train you. So what do we got here?
So this one here, this is just, you know, your first time buyer. They don't have a lot of extra money. They're very, very payment sensitive. Okay. They really can't afford much more than we had them approved for back in January. So I've showed, okay, here's what, with a $500,000 house, 10% down, this is what we can do with standard mortgage insurance. And in our market, homes appreciate a lot faster. So we generally are selling monthly mortgage insurance because people are able to get out of it in a couple of years, typically. But with that increase in payment, these folks were basically saying, hey, I'm gonna take my cards off the table and I'm gonna rent for a year. So we showed them and compared, okay, here's the difference. Your payment has gone up $121, but we can't really, you know, actually, sorry, $121. But we can't, you know, recommend that you go off the table. So let's look at a different strategy. So what I did here is I just showed buying out of the PMI. This is a 101 type of a presentation, but it's really important because sometimes we can get really deep. For those lenders, like everybody on this panel, are doing tons of transactions, high level of understanding of all the options. Sometimes we forget about the basics, right? So bringing this out, showing the client, hey, we can buy out a PMI. I share this with their agent and say, look, I can get it now to where their payment only goes up, you know, $33 or whatever, $32 a month. And they can afford that.
No, that's a great strategy because it's going beyond the transaction. It's like, hey, here's the transaction, and this is what it could look like after. This also reminds me of a counter offer analysis. Guys, there's a lot of times where if you're a mortgage coach and you know how to present options this way, and you've got a client that's in counter and they're like, oh, but I don't want to make the offer I need to get the home. You put the total cost analysis in. You can show them strategies that show today, show the future. You can also show them like, hey, what if you don't get this home and rates do go up and it takes you 3 more months? What do you think is going to happen to values in 3 months? You can start showing them, well, look what that might look like 2 months from now, 3 months from now. And you can vision cast and help the client get clarity. You know what? We want this home. We like this home. We understand how we can finance this home using MI as a strategy. You bring clarity, you bring confidence, you're adding a value and a service to agents. Greg, anything else you want to say before we go into wrap up mode?
Yeah, the one thing I would add is, you know, everybody on this panel right now, at least, is in either California or Washington, okay, where they do their business. We're used to these super competitive markets. There's a lot of markets in the country right now that have had this kind of competition for the first time ever, right? So if you're in one of those markets where you haven't been having to deal with low appraisals and way over asking, you need to educate your agents because they don't know what they're doing. They're out there making offers. They're in a lot of cases, and I think Kathryn touched on this earlier. A lot of cases, you have agents that are saying, "Oh, you're pre-approved with your credit union. Great, that's just great enough, right?" I'm using these opportunities when I'm sharing these to talk to the agents about, hey, is there anybody that you are having trouble getting into a home, that they've made 5 or 6 offers and they haven't got a home? Well, are they open to talking to me about their financing, right? There's a lot of opportunity right now, especially if you understand these strategies.
Hey, if you could stop sharing your screen real quick.
Yep.
I want to share my screen and I want to go into wrap up. A few people have asked about the Modern Mortgage Summit, Modern Real Estate Summit. I want to remind folks, guys, that this event is coming up. We've already sold over 3,000 tickets. So several large lenders have bought tickets for all their loan officers. What's going to be amazing about this is you're going to have America's best realtors teaching strategies to be modern, and it's micro content. While there will be 18 keynotes, most of the presentations will be 5 minutes. So it'll be realtor scripts. So we highly recommend you check this out because now you can hear directly from realtors on a stage, what they're doing, how they're saying it, and you can give that out in your market. So we're having a lot of loan officers buy 10 passes so they can give them out to realtors. We have a lot of regionals that are buying, 500 and 1,000 tickets to give it out to their region. So if you are interested in that, reach out to me or Todd if you want special pricing on it, or you can go to the website and you can buy up to 10 tickets on the website. So check that out. And that answers the questions there. Todd, anything else you want to say on that before we close out today's call?
Well, for those of you who were, the almost 10,000 people who went to the Modern Mortgage Summit, just think of that where we had the best of the best in the mortgage world. Now we'll have the best of the best in the real estate world. So it's not just an opportunity for real estate agents. It's actually the opportunities for you to hear what those best strategies are so that when you're looking for what are you going to discuss with your real estate agents on upcoming phone calls or conversations is, hey, I learned this new strategy. Have you been deploying it? Hey, I heard this great script. Have you ever used it before? So it's just going to be more for you to actually be better partner to your real estate agents and the prospect agents. I'm just so excited for it.
Yeah. And one more thing, we're going to have a couple from the mortgage coach community ambassadors. Dan Keller is going to be one of those ambassadors that is going to create some content, not for Dan Keller, but for the mortgage coach community so that we have realtors. Every realtor that attends that event is going to go, why isn't my loan officer an expert at doing a move-up analysis? Why is my realtor or my loan officer not creating a rep versus own? Why does my loan officer not know how to have this conversation? So this is a thing. If you're a mortgage coach, you want your realtors to attend so they can get that information. Also, we're going to be talking about how are loan officers giving away these tickets, because I can guarantee you there will be some loan officers, the emails they use to talk about this event, the conversations they have to talk about it are going to be better than others. And I can assure you, Dan Keller is going to be one of the better at giving these tickets away and scripting it. So Dan, next week sometime, I want to hear about what you're doing and how you're, having, call it the Modern Real Estate Summit conversation with agents. If you're game, we would love to hear what you're doing and how you're doing it. All right, guys, we are 3 minutes over. Hopefully you got value from this. Every Friday at 9, we are doing these masterminds. So if you have more questions on this, if you have other topics, last week we did a brand new loan officer mastermind where we brought on some mentors of new loan officers. We brought on some new loan officers. And I personally felt like we crushed it. We gave the roadmap on how to go from I'm new in the mortgage business to I'm killing it and I'm a black belt in mortgage advice in your first year. And today we covered a big problem. I feel like we killed it. Thank you, everybody, for the value you brought. And give us a like, share it with your friends. And this call is a wrap. Take care, everybody.
Good seeing you all.
Thank you, guys. Thanks, everybody.